There's a completely legal way to shift thousands of dollars from your taxable income to your kids, helping them to build wealth early, teaching them about money, and saving you big on taxes at the same time. I'm talking about hiring your children. Yep, your own children can become your smartest tax strategy before the year ends. Let's break down exactly how this works and how to do it right. First things first, this isn't a loophole. The IRS allows business owners to hire their family members, including their children, as long as the work and pay are legitimate. Here's what this means. Number one, the child must perform real work that's appropriate for their age. So you can't say that your 7-year-old is going to file your taxes. You get what I mean? Number two is the pay must be reasonable for the job. You can't pay your 8-year-old $50,000 to hand out flyers. And number three, you must keep documentation. That means a job description, W-2s, I-9s, W-4s, and timesheets. Here are some real examples of how I have done this in the past and how I am doing it now and will continue to do it in the future. In the past, I own a hair accessories brand called Bramlin and Rose. And when my daughter was just 2 years old, I was able to pay her as a model. Now, typically, if you Google how much do models get paid an hour, it is $100 an hour. So we created some headbands for her, placed them on her head, hired a photographer, and paid her $100 per hour for that photo shoot. Now, that money means that my 2-year-old had earned income, which opens up so many doors for retirement investing as well as the tax savings for us. Now that my children are a bit older and we have a laundromat, our children are now being employed as coin collectors from our washers and dryers. And because my 7-year-old knows how to do math, knows how to sort, and can count, she separates all of the money. She also puts it through the money machine and documents how much we're making every single collection. So these are some things that if your child has the skill set to do, you can employ them and pay them. We are paying them the $20 an hour for this process, which is what we pay all of our other employees. So administrative work like filing, organizing, and answering calls, marketing work like social media help, editing videos or modeling and photos, or even some manual labor such as cleaning your office and shredding papers, which is another task that we give to our children. There's no official minimum age if the work is age appropriate. The tested age means that when this process was evaluated by legal entities, that's what they determined would be an appropriate age where kids could start to do things on a consistent basis. But again, my daughter was 2 and she modeled. My son is 4, and I literally have videos of him opening the change machines, dumping the quarters into the bucket, and putting the collection bin back into the machine. So if your child can do the work, then why not pay them for it? But remember, certain industries like construction, they have restrictions. All right, now let's talk about why this is so important. Number one is tax-free income for your child. In 2025, a child can earn up to $15,750. That's the standard deduction and owe 0 federal income tax. For 2026, this number increases to $16,100. So that means that you can pay your child that amount deducted from your business income, reduce your taxable income, and they keep that money tax-free. So if you are in the 35% tax bracket and you pay your child, let's say not quite the standard deduction, just under it, $14,000, that's almost $5,000 in tax savings for your family. Number two is a tax deduction for your business. Those wages are deductible, just like paying any other employee. You are effectively transferring income from a high tax bracket adult to a 0 tax bracket child. And number three, no payroll taxes for your kids under 18 in certain setups. So this is really, really important that you establish your business correctly if you desire no payroll taxes for your children. So if your business is a sole proprietor or a partnership between spouses, you don't owe Social Security or Medicare taxes on wages you paid to your children under 18. So that's another 15.3% in savings and no federal unemployment tax either. If your business is an S Corp or a C Corp, you do have to withhold payroll taxes, but you still get the income shifting benefit. But this is really important. And And when we were establishing our laundromat and meeting with the CPA, she said, well, Brittany, maybe you should make it an S Corp after the laundromat has made $50,000 or so, especially if you're going to pay yourself a salary. And I said, it is likely that my kids will work in the laundromat far longer than I will work in the laundromat. So therefore, we plan to keep it as a partnership so that we can avoid paying payroll taxes for our children. But if you don't understand some of these nuances or what your goals are for the business, how can you have informed conversation with those in your financial community to help you reduce your taxes and keep more of your money? And number 4, retirement savings. Once your child has earned income, they can contribute up to $7,000 in 2025 to a Roth IRA. And if that grows over their entire career, then that could equal hundreds of thousands of dollars in a tax-free account at the time that they would make withdrawals. Number 5 is college savings. You can use the wages to fund a 529 plan without triggering the gift tax. So this is another way that you can increase what you're giving to your children strategically. And finally, this teaches a real financial responsibility to your children. Your kids learn how to budget, save, and invest, valuable lessons that will last a lifetime. So here's what you need to know about payroll taxes. If your kids are under 18 and you're doing a sole proprietorship or a partnership with your spouse, there's no FICA, no Social Security, or no Medicare tax, and you have no federal unemployment taxes either. Only income tax applies, which is often zero if they earn less than $14,600. But if your business is an S Corp or a C Corp, you must withhold and match those payroll taxes. So that's 6.2% for Social Security and 1.45% for Medicare. Plus, you're going to have to pay the federal unemployment tax at 6% on the first $7,000 in wages. Once your kids turn 18, payroll taxes apply no matter what type of business you have. So still shifting your income from a lower tax bracket can save you thousands of dollars a year. So let's walk through how you can set this up and set this up the right way. Step 1 is to create a real job description, document tasks and hours, and actually your children can be involved in this documentation process. Number 2 is to set up a reasonable wage. So you want to check out what your local pay rates are for similar work. It might be that you're just opting to pay minimum wage to your children. However, I think that this is worthwhile to do some research and understand if you can pay them more for the work that they're doing. Step number 3 is use a payroll software like Gusto or QuickBooks or maybe ADP to issue paychecks and W-2s for your children. Step 4 is to keep time logs, duty lists, and proof of payment. This is critical. You want to make sure that your documentation is on point because trust me, I have received letters from the IRS to say, I think that this salary, these earnings have been inappropriately applied to your child's Social Security number. Please confirm that they actually did the work. So you want to ensure that if there's any question of your child working, especially if they are at a younger age, you have the appropriate documentation showing the work that they're doing. In step 5, file any required payroll forms. Step 6 is to help your child use that money wisely. I like to give my child a check, allow them to go and take it to the bank to receive the cash and then to divide the cash into their goals. Their goals might be to purchase a new book or to go on a family trip, purchase some new clothes, things of that nature. Teaching our children financial responsibility is so important, and also allowing them to understand that they cannot spend everything that they earn, that they must save for other goals, and also that they must invest. Starting investing at an early age will allow that money to compound significantly and really setting your children up for generational wealth. So you want to fund a Roth IRA, start a 529 plan, and teach them to save for their first investment. Here's a quick example. You pay your 14-year-old $10,000 for social media. You save about $3,500 in taxes, and they invest $10,000 in a Roth IRA. By the age of 60, that could grow to over $270,000 tax-free. And that's not just tax planning, that's generational wealth. You lower your taxable income, your child earns tax-free income, you build family wealth and teach financial literacy all at once. This strategy is available to most small business owners, so don't wait until the year ends to take advantage, or don't wait to think of your idea of how you can position yourself as a business owner for 2026. Before you hire your children, you always want to consult with a CPA, but make sure you have your goals in mind and you take a couple of gems that you've learned today from this video. And if you have any other questions about how to do this properly, what other things that we do in our businesses, then please put them in the comments. I am happy to answer any questions to help you along this journey. And until next time, people, I want to say thank you for watching and share this with a parent who's looking to start their own business so that they can hire their children, offset their taxes, teach their children financial literacy, and build generational wealth. Until next time, stay wealthy, people. Bye-bye.